So hello and welcome everyone. In last class, we was discussing about the origin of Reserve Bank of India, and when I was discussing about the origin of Reserve Bank of India, I told you how Reserve Bank of India came into existence as a private organization, but later on it became a government organization, right? And initially, it was responsible for currency management and forex management, but later on through banking regulation act, RBI got the power of, apart from currency management and forex management, monetary policy management and other power were also given to the Reserve Bank of India, right? And I also told you about the contribution made by CD Deshmukh in the last lecture, right? So the RBI's organizational structure is like that. RBI's structure, top of the body is the Central Board of Directors. Acha, one more thing before going ahead. Those who have any questions, my request is please listen the lecture carefully, and later on at the end of the lecture, I am going to take your questions. Right. So my humble request is you should listen the lecture very carefully, and at the end of the lecture, I'll answer your any of the doubt or question if you have. Okay. So we have discussed about the history of RBI. Now we are moving towards the organizational structure of the Reserve Bank of India, and in the Reserve Bank of India structure, I also discuss about these things. Means central board having total 21 members. One is governor, four is deputy governors, four are directors of local board. RBI have total 31 offices, right? One is head office, four is local offices at four metro cities, and rest of the offices, right? So rest of the offices all over the India. Fine. So in this way, the four local offices head, they are known as directors, and they are also part of central board. Central board of directors is a very important organization. I'll let you know what are the important features of this central board and why it is very important when I'll start discussing about the functions of central bank. Governor at present, Sashikant Das is the governor, and the tenure of governor is of 3 years. Right. Whereas Mahesh Kumar Jain, Dr. Patra, Rajeshwar Rao, and T. Ravishankar, these are the four deputy governors of the Reserve Bank of India. Right. And I also told you about the Mint Road. Whenever they'll use this term Mint Road, they are giving the reference of what? They are giving the reference of RBI. Okay. Now, moving ahead, uh, RBI have fully owned subsidiaries, means these are the organizations are completely under the control of Reserve Bank of India, and these are DICGC, Bharatiya Reserve Bank Note Mudran Private Limited, Reserve Bank of India Information Technology Private Limited. Another is Indian Financial Technology and Allied Services, and fifth one is Reserve Bank of India Innovation Hub. Right. So these organizations are fully owned subsidiary, means they are established and controlled by the Reserve Bank of India. Deposit Insurance Guarantee Corporation of India is very important organization with respect to the deposit. So we will discuss these organizations, then we will move towards the functions of Reserve Bank of India. Right. So first, let's discuss about the Deposit Insurance and Credit Guarantee Corporation. So with its name, Deposit Insurance and Credit Guarantee Corporation. Right. So first point is means the legal structure of this Deposit Insurance and Credit Guarantee Corporation. Right. So it was not a one organization established at a single point of time. Actually, these were two organizations, and later on they were merged, and then this organization came into existence. In India, actually, banking, since its inception, was a private business. It was a private business, right? Even after independence, it was a private business, and most of the banks, except Reserve Bank of India, then Imperial Bank of India, which was converted into the State Bank of India, most of the banks in India, they are private in nature and character, right? And when any person is going to deposit their money, then that person is having some kind of the fear in its mind. What will happen if this private organization will go down? And that fear came actually true in early 1950s when two banks in Bengal, they liquidated, means they were in trouble and finally banks were liquidated. Then people have this fear, and government also got this thing कि if such kind of things happen, people will not deposit money in the bank, so we have to provide kind of insurance against the deposit made by the people in the banks, right? So that is why the bill was introduced in the parliament by the government, and bill was passed, and deposit insurance came into existence on 1st January 1962. So that was an organization which is for what? Which is for providing providing insurance to deposit made by the people in the bank. I'll discuss the function, but let just know the genesis of DICGC. Then I'll discuss the function of DICGC. Right. So as I told you, banking was a kind of private business in India, right? And most of the business activity, or you can say the economic activity in India was controlled by the government. However, there are some private organizations also present in our economic system, and especially in the 1960s, especially after first 5 year plan, in the second 5 year plan we have focused on development of industrial bases in India. To develop the industrial base in India, industry need credit, and that is why government of India in 1960s also think that we must have an organization which can promote and which can provide the credit to industries. And with this objective, Government of India, in consultation with Reserve Bank of India, has introduced Credit Guarantee Scheme. Under this scheme, RBI was assigned to provide the credit to industries, right? And at that point of time, no IDBI, SIDBI kind of organizations were there to help to the private industries. So that is why this credit guarantee scheme was introduced by the government of India, and that scheme was implemented by the Reserve Bank of India. And in order to implement that scheme, Reserve Bank of India has created a company, and that company was known as Credit Guarantee Corporation of India. It was a public limited company. Many times you have listened about private limited and public limited company. What is the difference between public limited company and private limited company? You can go in the details of company act, but basic thing what you need to understand is when it is a private limited company, ownership is limited to few people, right? And they are not bound to share their shareholding of that particular company until unless they have wish to do that. Whereas public limited company can have shareholding of anyone, right? Public limited company can have a shareholding of anyone. So anyone in the sense when RBI has established this public limited company with an objective to provide the credit guarantee, especially to small and medium industries in India, then RBI have this understanding कि in this company, any bank or even government can take the ownership without any legal trouble. That is why public limited company was established and known as Credit Guarantee Corporation of India Limited. Right. So Credit Guarantee Corporation of India Limited And you know that in 1970s government has started the nationalization of the banks in India. And the government thought that the bank can be an engine of growth in India, right? So credit should be provided through the banks, right? And this is why bank was nationalized, right? So government want banks to be the growth engine, right? They can help not only common people but also industries. That is why now, government went for the nationalization. Government through RBI was providing the deposit insurance, right? Now, government found that deposit insurance and credit guarantee can be given through banks, right? And it is basically focused on the banks. That is why later on what happened, these two organizations were merged. These two organizations were merged, and finally in July 15, 1978, Credit Guarantee Corporation, Deposit Insurance and Credit Guarantee Corporation of India was established. Deposit Insurance and Credit Guarantee Corporation, right? These two organizations were merged. Why these two organizations were merged? See, again, just repeating for your better understanding. Initially, because banks were private. Initially, when India got independence, banks were private, and people have not faith in the bank whether what will happen to their money if bank is going to be collapsed. So that is why government has established deposit insurance, deposit insurance company. Later on, government, when in the second 5 year plan, government want to focus on industrial development, then government thought that we must have a kind of organization which can provide credit to small and medium businesses. That is why, in consultation with Reserve Bank of India, you have established credit guarantee scheme, and to implement that scheme, RBI has established Credit Guarantee Corporation of India, right? In 1970s, government went for the nationalization, and government want banks to be the engine of growth, right? And banks deposit was secured by what? Deposit Insurance Act, that is Deposit Insurance Corporation. Whereas bank can provide the credit through RBI's public limited company, that is Credit Guarantee Corporation of India. So finally, RBI and government feel that if both organizations are going to be merged, it will be going in the better synchronization, banks, RBI, and economy. So for better synchronization among the bank, RBI, and economy, these two organizations were merged. Whereas if you will go further in 1980s and in 1990s, especially in 80s and 90s, Indian government found that government owned company or the socialist model of economy is not as successful, right? So we must have to promote the private industries. Process was started even in 1980s. When I'll discuss the history of Indian economy, I will going to explain you in the detail, but for just your reference and better understanding of this topic, I'm telling you here, right? So in 1980s, the process of broader industrialization was already started, and in 90s, beginning of the 90s, India went for balance of payment crisis, so we were forced to open our economy. But process was already started. Process was already started, but because of that crisis, the process was implemented in the better and broad manner, right? So in 1980s, when I said that this process of industrialization, government focused on the industrialization. To focus on this industrialization, government has established Industrial Development Bank of India. Then later on, government has established Small Industrial Development Bank of India. So IDBI and SEBI were established, and even government through ministry started providing financial assistance to micro, small, and medium industries. Right. So the point is why I'm telling you this thing. Why I'm telling you this thing? Because we are discussing here about the DICGC. So DICGC. So actually, what happened? In 1950s, 60s and 70s, in 1950s and 60s, you want better coordination among government, RBI, banks, and economy, right? So that is why you have just merged these two organizations. But when you have entered in 1980s, especially this credit guarantee part were taken by different banks, that is IDBI, Industrial Development Bank of India, SIDBI, Small Industrial Development Bank of India, then later on Mudra Bank. So government continuously providing direct support to economy. And the role of RBI, which was initially more directly supporting to economy, RBI gradually become more in the regulatory domain. RBI went more in the regulatory domain, and its direct kind of help to the economy were diluted diluted because RBI must have to focus more on regulatory work, because Indian economy since 1990s started expansioning in the phenomenal manner. So RBI must have to focus more and more on regulating thing, and we must have a focused organizations which can provide credit to different part of the economy, right? So government started directly focusing on the economy by providing the economic assistance and aid, and also through banks like IDBI and SIDBI. So the role of DICGC at present is more and more focused on what? This is more and more focused on deposit insurance rather than providing credit guarantee. Though the organization in its act have this both role of what? Deposit insurance and credit guarantee. But the role of credit guarantee is diversified in the present date, and there are different organizations which are particularly focusing on the different part of the economy to provide credit. So in the present date, deposit insurance and credit guarantee corporation basically focused on providing the deposit insurance rather than focusing on credit guarantee, because credit guarantee role is taken by other dedicated organization. So maybe in future this name is again going to be changed, maybe, but as of now this organization is completely focused on deposit insurance, right? And when last year a bank was having some trouble, or even any bank is going to have a trouble today, then the role of this organization came in the picture. So it's very important to discuss its role here, deposit insurance and credit guarantee corporation. But what we are going to discuss is more and more about its role of deposit insurer. So how this organization works, let's discuss. See, I was telling you now. So see what I told you. Credit guarantee function of micro small industries. Now it is launched by the government of India, and collateral free credit. So all these things, what I told you here about this credit part, this is now focused by the different organization. You just read this PDF, right? I'll provide you that PDF. Just read that PDF. I already explained you above, right? I already explained you above here, and what I explained you above here, this is written here, right? You can read that part. It is not very important to discuss. I already discussed in the detail, right? Now just let's discuss how this deposit insurance work, right? Which banks are insured by DICGC? All banks in India are insured by DICGC, whether they are commercial banks or they are cooperative bank. What is not insured? That is primary cooperative societies, Right. So primary cooperative societies, they are not being insured by the GIC, DICGC, but all other commercial banks, including foreign banks who are functioning in India, local area banks, regional rural banks, all of them they are under the purview of DICGC. All state, center, primary cooperative banks they are covered, but primary cooperative societies are not covered, right? uh, Once this RBA part will be over, we will enter and discuss. As per lecture plan, I am going to discuss the commercial banking part. Commercial banking part have commercial banks, and in that commercial banking I'm going to discuss this cooperative banks, and under the cooperative banking structure I'll explain you what is the difference between primary cooperative bank and primary cooperative societies, right? That need to be discussed in detail. That's why I'm not going here, because I have to explain the entire structure of cooperative banks. And when I'll discuss there, I'm going to tell you that primary cooperative banks come under the purview of DICGC, but primary cooperative societies do not come under that purview, right? And these primary cooperative society, basically they are not kind of organization which focus on accepting the deposit. They are focused more and more providing the business opportunities at a very local and regional level, right? So we will discuss in detail, but as of right now you can keep this thing in your mind. Except primary cooperative societies, all other banks in India, they do come under the DICGC's cover, right? DICGC's cover. And before going further, it is not optional, right? It is not optional for the bank. It is mandatory for the banks to be the cover, to have a cover of DICGC. It is not like an LIC which is optional, or life insurance which is optional for you, right? Because sometimes whenever uh, the advertisement of insurance company come, they always said what insurance is a matter of solicitation, means you are being requested. But here, when it is about the DICGC and banks must have to go with the DICGC, right? How and what they have to do, just let's discuss. So what does DICGC ensure? All deposits, all of the deposits which you are, means you know all the deposit, whether it is saving, fixed, current, recurring, all these deposit are going to be insured by DICGC, except these few deposits, right? Before going in the details of these deposit, just try to understand why they are not being insured, because these kind of the deposits are already insured by a sovereign, that is government of India or state government or foreign countries government. This is the reason generally they are not being insured. Now just read the list. Deposit of foreign governments, that is sovereign. Sovereign and government, it's interchangeable term, so keep this thing in mind. So they can use many times sovereign means uh, it's a political term. It's used in the basically in political science to tell you about the power of government, right? So generally in economy we believe that government generally do not default, right? Government generally do not default. So this is why uh, sovereign word is used for government. Sovereign guarantee, lot of things regarding sovereign we will discuss, but here now focus what deposit of foreign governments. So that is having the sovereign guarantee guaranteed given by the particular country's government, right? So there is no need to insure, because it is already under the cover by the government. Deposits of central and state governments, interbanks deposit, right? Interbank deposit, yes, it's a little bit kind of exception. What I told you here, interbank deposit. But again, interbank deposits are what? Interbank deposits are guaranteed by one bank to other bank, right? So one bank to other bank. So it is kind of what arrangement which is having the high volatility, means frequency is going to be very fast when the deposit, they are going to do the deposit kind of the thing. So that is why it is little bit technically difficult to ensure this deposit because of the high fluctuation in the amount and timing and frequency. That is why it is almost difficult to ensure this deposit. That is why it do not come under the purview of DICGC. Next is deposit of state land development banks with state cooperative banks. So state development banks, land development banks, they are the part of cooperative banking structure. We will discuss, but as of now, you can keep this thing in your mind. Deposit anything which is related directly to the government. Anything which is directly related to the government is not going to be insured by DICGC. Any amount due on, off and deposit outside of the India, right? So outside of the India means liability on other. Liability is not in India, liability is to offshore. So it is going to be technically very difficult to identify who is actually liable. That is why it do not come under this preview, right? It do not come under this preview. Next is what? Next is the amount which is being specifically exempted by the corporation with the previous approved Reserve Bank of India. So anything which is uh, under the Reserve Bank of India is definitely not going to be, it's not required because it is already having the approval of what? It is already having the approval of Reserve Bank of India. So it is not required to secure. How the question can be asked? Generally, question is supposed to be asked in the objective type, and they are going to ask you which of the following is not insured by the DICGC, right? So how is, if you are not able to recall, if you are not able to recall what principle you have to follow, the principle you have to follow, what is the purpose of DICGC? To provide a kind of assurance to the customer, normal customer. It is created to provide a kind of assurance to the normal customer, their deposit is secure, right? So there is no need to cover, under this scheme there is no need to cover government's deposits or banks deposit. There is no need. It is basically meant for what? It is basically meant for who? It is basically meant for the common man, right? So anything which except the common man is not going to be under this deposit insurance and credit guarantee corporation. So this principle you can keep in your mind. If there will be any confusion in the exam, you can try and apply this analogy so that you can eliminate the option, right? And as an exception, what I told you, the primary cooperative society do not insured by the DICGC, and these are the uh, things which are not being covered under the DICGC, right? Now it's very important to understand how much can be insured. 5 lakh per person in same bank with same kind of account holding. Suppose that there is a person A, he have deposit in SBI, right? So he have deposit in SBI at Delhi branch, Mumbai branch, Kolkata branch, right, and Hyderabad branch. So if person A have total deposit 3 lakhs here, he have 2 lakhs here, he lacks 7 lakh here, he have 1 lakh here. So total how much he have? 13 lakhs. But how much amount is going to be insured? That is 5 lakh. 5 lakh per person. But suppose that he also have an account in HDFC Bank, that is of 3 lakh. So this amount will be insured separately. This amount will be insured separately. Another thing, suppose that initially he was having only 2.8 lakh and he earned the interest over the time of 20,000. So both the principal amount and the interest amount is going to be insured. Means when DICGC insured your amount, that includes principal as well as interest amount. Another thing, whatever the amount you have deposited in particular bank, doesn't matter wherever you have deposited, means wherever you have deposited, different branch, the total sum, then out of that total sum 5 lakh will be insured, including the principal and interest amount. But suppose that if person A have opened another account in SBI with his wife, right? He has opened another account in SBI with his wife, right? And that amount is of 4.5 lakh. Then this deposit will be insured separately. This amount will be insured separately. That is why it is written here 5 lakh per person in same bank with same type of account holding. If account holding is going to be changed even in the same bank, that account is going to be insured separately, right? If the bank is changed, then definitely that deposit is going to be insured, right? So this thing you have to keep in your mind. The maximum amount, this is 5 lakh, that is inclusive of principal and interest. Per person means if the person is an individual or a company or a kind of what, joint Hindu family kind of the account, husband and wife joint account, then it will get separate treatment, right? And with same type of account holding, right? So this thing you have to keep in your mind. Now the next question is, who pays the cost of deposit insurance? The cost of insurance is paid by whom? The bank. So suppose that SBI is a bank or HDFC is a bank, so the cost of insurance is bear by this bank, right? Take a few more questions on this DICGC. When DICGC is liable to pay what? The amount DICGC is insured. So if bank is going to liquidate, means company is going to be not able to repay their amount and they are on default, in that case DICGC is liable to pay, and this amount is going to be paid by DICGC to bank, and bank will pay this amount to the persons who have deposited his money. So if in this case he has deposited how much? 13 lakh. For God's sake, it should not happen, but in case if something will happen, then how much he is going to get? 5 lakh. Only 5 lakh, right? So in general, public have this perception that if I am depositing my money in government bank, it is more secure in comparison to private bank, in comparison to money put in the mutual funds, money put in the stock market, right? So wherever money is invested, whether it is stock market in this is on shares or bonds, right, or on mutual funds, or even it is deposited in private banks or government banks, all these deposit have a risk, but the amount of risk factor decreases whenever you will go from stock market to bank, right? And where it is completely means it is not having any kind of the risk, it is deposit with sovereign. So if you are going to deposit your money in PPF, right? If you are going to deposit your money in PPF or Kisan Vikas Patra, KVP, right? So these certificates are basically that can be issued by banks, as well as post office, it is issued by post office, right? So these money will go to whom? This money will go to government. So that is why it is having a sovereign guarantee, right? So it is having sovereign guarantee. So that money is going to be the most safe. And this is the reason why generally they do give least amount of the interest. They do give the least amount of the interest on your deposit because they are giving you the highest guarantee, right? So that is why most of the old age people in our family, they insist on what? They insist to open the PPF, deposit your money in the post office, because they have this perception in their mind that money is going to be, even in the LIC. If you are going to say that I want to take some insurance, or I want to invest some plan of the ICC bank or the private, they'll insist you go for the LIC. Why? Because whatever the money is going to be taken by the LIC is going to invest that money by purchasing government bonds, right? By purchasing government bonds, or they are going to purchase whatever is issued by the sovereign. So that's why it's generally, wherever the insurance you are going to purchase from the LIC, it is not going to be any kind of the default kind of the thing. That is why, right? कि LIC में invest करो, invest in the LIC, right? But now you can see that this year LIC is also going to be in the enter in the market. Let's see how things are going to be changed, right? So this is all about DICGC. And few more things. As I told you, when DICGC have to pay, if there will be any default by the bank, then DICGC have to pay. Can insured bank withdraw from the DICGC cover? No, you do not have this option, right? There is no such kind of the option. You cannot withdraw. Can DICGC withdraw deposit insurance cover? Means vice versa is also true. Bank and DICGC. So what cover is DICGC is giving you? Bank do not have this option. But if bank is going to be liquidated, or bank is having any trouble and bank is not paying the premium, in that case, DICGC can withdraw the cover. DICGC is going to withdraw that cover, right? And before doing that thing, DICGC is going to put this thing in the newspaper, leading newspaper advertisement. We are going to withdraw our cover from this bank, right? So DICGC have this right, but generally it is not going to happen, right? Because such kind of situation, RBI is not going to allow to this thing happen. Even situation is about to arise, RBI will take necessary action to prevent such kind of the disastrous situation. But if we are trying to find out is it possible or not, yes, it is possible, but RBI is not going to let this thing happen. But if the question is going to be asked, is it possible? Yes, it is possible. DICGC can withdraw the cover. But whether bank is capable of doing this thing? No, bank do not have this option. Bank must be under the cover, right? So this is all about DICGC, right? One of the most important organization under complete control of Reserve Bank of India, right? So first organization we have discussed. Now the second organization we have to discuss, that is Bharatiya Reserve Bank Note Mudran Private Limited, right? Note Mudran means the printing of currencies. The printing of currencies was first time started in India in 1928. Before 1928, these notes were used to be printed outside the India, and but obvious it is Britain. So in Britain, all these Indian paper currencies were printed, but later on it was shifted to India, right? It was shifted to India, and note printing was started in India. Fine. So note printing was started in India, and you know that RBI was established, and RBI got this power to print the currencies, right? So printing of currency in India started in 1928, and later it was transferred to the Reserve Bank of India. And when Indian economy went for the liberalization in 1991, RBI found that now in Indian economy there will be more circulation of money, and it is very important to first of all properly manage this circulation in very proper manner. So better to have a separate entity, and that entity should be focused on printing and management of currency circulation. Currency circulation, how much currency is printed, where it is, all these kind of the data and its printing is going to be managed by this company, right? So this company was completely owned by the Reserve Bank of India, right? And here some details are available, so just reading for your reference. uh, Bharatiya Reserve Bank, Bharatiya Reserve Bank Note Mudran Private Limited was established by the Reserve Bank of India as its wholly owned subsidiary on 3rd of February 1995 for the printing of banknotes. Is 1 rupee is a banknote? No. 1 rupee is issued by Government of India. So except 1 rupee note, all the notes are being printed by whom? Reserve Bank of India. Acha, before moving ahead, those people who are watching this lecture, they tell me, uh, I told you I'll take your questions at the end of this lecture, but I have one question for you. Highest denomination can be printed by the Reserve Bank of India. Which denomination? The highest denomination which RBI can print. Can anyone answer this question? Is anyone? I'll wait for your reply. The highest amount of banknote and coin. Can anyone answer? I'm not able to see any comment here. Okay. Okay, I'll wait for another minute. No one? Okay, I'll tell you. The maximum amount of note is 10,000 and maximum amount of coin is 1,000. Right? During the Second World War, the 10,000 rupee denomination note was printed, and later on it was disbanded. Right? And regarding coin, I told you about one law, that is Gresham's law. So that is why generally you cannot issue higher denomination coin, but sometimes to give respect, to show your gratitude towards something, you can issue a higher denomination coins, and they are not generally for the purpose of circulation in the economy. They are just issued for the commemorative coins, right? They are commemorative coins, and RBI time to time issue that coins, right? So, for example, 150 rupees coin on Dr. Bhimrao Ambedkar, right? So time to time, suppose that some organization, an important prestigious organization, has completed 50 years. So RBI, in the memory of that thing, commemorative coins of 50 rupees, 50 rupees coin is going to be issued by Reserve Bank of India, right? And most of the times these coins are being used to mint those coins. Precious metal like silver is being used, right? Or other precious metal is being used, so generally you do not find in circulation. They are costly, and generally RBI do the auctions of those coins through their minting units, right? So 1,000 rupees banknote, 10,000, sorry, 10,000 rupee banknote and 1,000 rupee coin is the maximum denomination can be issued by Reserve Bank of India. Right. So company, this Bharti Note Mudran Private Limited have two press in Mysuru and Salboni in West Bengal. Apart from that, there are many other presses. For example, in Devos, you have a press unit where the notes are being printed and issued. But these two units are under complete control of Bharatiya Reserve Bank Note Mudran Private Limited. So these two units are under complete control of this organization, whereas the other units they are of Government of India, but they issue the notes as per administrative action taken by this organization. And what amount should be printed, it is going to be decided by the Reserve Bank of India as per the need of the economy, right? But for the better management of printing of new currencies and to means whatever the mutilated notes, how to finish it, right? So such kind of the thing is who is responsible? Bharatiya Reserve Bank Note Mudran Private Limited. This organization is responsible, right? Now moving to third organization, that is Indian Financial Technology and Allied Services, right? Whenever you do the transactions, right now these days, whenever you do the transactions, messages will come, right? Lot of payment transfer system is available like IMPS, NEFT, RTGS. All these are a payment system, RTGS, NEFT. They basically they controlled by the Reserve Bank of India. But who provide the technical support? Right. There is two part. One is administrative part, and another is technical support. Messaging technical support. You will get immediate message of deposit or credit or debit. All these things are the technical part, right? So to handle this technical part, this organization was established, and it was established specifically in February 2015, right? On the recommendation of Rangarajan Committee, right? Right. So, on the recommendation of Rangarajan Committee, this organization was established, and its main objective is what? Its main objective to provide all kind of the IT related services which is required for banking system and especially the Reserve Bank of India. And one of the important service which this organization do provides is Indian Financial Network, right? So you can see that it is underlying closed user group payment system network connecting India's financial institutions. So under this Indian financial network, all kind of the payment and banks institutions are connected, and it has structured financial messaging system. What I was telling you about the messages you generally get when the credit and debit will be there, and that is the backbone of messaging platform. Even National Electronic Fund Transfer, RTGS, the technical part is provided by IAFTAS. IAFTAS, they do provide this technical support. Now, another organization, Reserve Bank of India Innovation Hub, right? So, Innovation Hub, it was established in 2000. Reserve Bank of India under the monetary policy statement, Innovation Hub, right? Make in India initiative of the government, right? Startup India, a lot of thing. So how these innovations can be more useful and helpful in the financial parlance. So having this thing in mind, RBI has established this RBIH, which generally provides the innovative solutions. Ki what kind of the solutions we can implement in our system so that our financial system can be more effective in nature, right? So this is all about wholly owned subsidiaries of the Reserve Bank of India. The Reserve Bank of India own this organization. Now let's move towards the functions of RBI. So before discussing the functions of RBI, I just want to let you know uh, the legal framework from where RBI have certain set of functions. RBI do have set of functions, but from where RBI draw this power to act. So RBI's power come from these legal framework, and the most important is Reserve Bank of India Act. Most of the powers of Reserve Bank of India is defined under the Reserve Bank of India Act 1934. Apart from that, the second most important is Banking Regulation Act. So under this Banking Regulation Act, the regulatory power RBI do have over the banks and financial institutions that come from this act, and wherever it is required, it is time to time it is amended to provide more statutory power to Reserve Bank of India to overcome any difficulty which Reserve Bank of India is facing with respect to regulation of bank and their businesses. And this act, Foreign Exchange Management Act, right? In short, it is FEMA. FEMA. Earlier, it was Foreign Exchange Regulation Act. FERA. Foreign Exchange Regulation Act. So, Regulation Act was there in 1970s. This act was passed, but later on it was changed by Management Act. So, what is difference between regulation and management? What is difference between regulation and management? Being as a banker, suppose that you are a banker, so you must follow the rules and regulation written in the rule book, right? Which is written in the rule book. It doesn't matter what is the situational requirement, you must follow what is written there, right? You can't do anything, you just have to follow what is written there, then it is regulating, right? I am using my regulatory power. It is written in the rule book and I am going according to the rule book. It doesn't matter what is the circumstances, I am just going to follow these set of rules. So this is what I am talking more in terms of regulation. But when you have this power ki, okay, bank must be closed by this time, but to understand the situation outside and the need for people who are standing outside the bank, and it is very difficult for them to go back and come back again, I as a bank manager have some power to allow extra working hours. Suppose that if you have, but as per regulation, in any case bank will be closed by 6 p.m., right? So you are doing your work as per the regulation. But if it is being under the Management Act, so normally it should be 6 p.m., but if bank manager or the authority who is heading the branch at that point of time, he can decide by using his wisdom, right, to increase the banking or for that particular day. So if you will go by the regulation, by 6 p.m. it is going to be closed. But if you are having the managing power, then you can extend as per the requirement. So earlier, Indian economy was a kind of closed economy, social system, socialist kind of the economy, where India's economy's interaction with other economies were very limited, right? Was very limited. There was no huge inflow and outflow of foreign currency. So kind of management thing was not required. Number one. Number two, government of India don't want, they don't want the free flow of foreign exchanges, right, to maintain the structure of the economy. So that is why RBI must work under the given rules and regulations only. But later on, when you have opened the economy, you found that that law itself creating a problem for the betterment of the economy. So that is why FERA was replaced by FEMA, right? So Reserve Bank of India Act 1934, Banking Regulation Act 1949, and this one. It's the three most important act which provide the power to the Reserve Bank of India, and these three acts make RBI as one of the most powerful central bank in terms of the power central bank have. Right, in terms of the power held by the central bank, it makes Reserve Bank of India one of the most powerful central bank in the world. Even Federal Reserve of United States, they do not have such kind of the power what RBI do have, right? They have more liberalized kind of financial system. But here in India, like we in the family, there is always kind of the family head who have extreme control over the family. Similarly, in the banking system, but gradually this powers are being diluted. I will discuss when I'll discuss the particular section. So but as of now, uh, these acts make him very powerful organization. Public debt, being as a government bank, RBI have to manage government's debt, and that power come under this act, right? Securities, securitization and construction of financial assets, and enforcement of Securities Interest Act, right? So that also give the power when it is about banking, insolvency and bankruptcy code we are going to discuss. This is the act which this generally give the power to RBI. Whereas credit information companies, there are a lot of credit information companies, how they will get the data, whether they are going to have this license or not, all this is regulated by the Reserve Bank. This act, Payment and Settlement Act, right? So payment and settlement should be accepted by the all the parties. So if they are not going to accept, who will punish them? RBI will punish them. RBI is getting the power from where? The Payment and Settlement Act, Payment and Settlement Regulation Act. So payment and settlement, earlier check and draft. Right now, lot of kind of the payment systems are available. That is why time to time need is required to have different laws. Government securities regulation. Right. So government securities regulation, it is more related to this public debt management. Right. So Factoring Regulation Act. Right. So Factoring Regulation Act, RBI get the power to manage all the kind of factoring power in India. Right. When I'll discuss the banking system, I'm going to explain you there in details about this particular act. But as of now, the main thing you have to keep in your mind, these acts: Reserve Bank of India Act 1934, Banking Regulation Act 1949, and this one. These are the three pillars from where RBI draw most of the power to have a control over the entire financial system, and it's the most powerful central bank in the world in terms of power the RBI do have. Right. Now we should start about the functions of Reserve Bank of India. Right. So I told you here about when I was telling you about the structure, the central board of directors. Right. So central board of director, I told you it's the organization having 21 people. The central board, one is governor, four deputy governor, four local board directors, 10 nominee for the from the government of India, and two government official. Right. So how it is very important to understand the role and function of this central board. So RBI have one function that is known as financial supervision. One of the most important function of RBI is the financial supervision. And this financial supervision is being done by board. Which board? Central board. Central board of whom? Central board of RBI. And who are in central board? One is governor, four is deputy governors, four the directors of local board, Delhi, Mumbai, Kolkata, and Chennai, right? Then 10 nominees of Reserve Bank of India, sorry, by the government, 10 nominees and two government official from the finance ministry. So this central board is comprised of 21 members, and this board create a board of financial supervision. So board of financial supervision is having all central board members, and they oversee overall functioning of our financial system. Regulator and supervision of financial system, who? RBI. So RBI's function is regulator and supervisor of the financial system. So when we are going to discuss about supervisory, how the supervisory come through the board. So prescribe board parameters of banking operation within which the country's banking and financial system functions. What is the objective? Maintain public confidence in the system, protect depositors' interest, provide cost effective banking services to the public. So these are the main objective of the supervisory of the financial system with respect to RBI, and RBI do this thing with the Board of Financial Supervision. Now let's discuss about Board of Financial Supervision. What is it and how it's work? So economy was open in 1991, and after that you realize that we have to look closely and regularly our financial system, what is not working, what is working, and how we can make it better, right? How we can make it better to eliminate the things which is not working properly and add those things which can make it more effective. So board was constituted, board of financial supervision was constituted in November 1994, right? So, and see, it is a committee of the Central Board of Directors of the Reserve Bank of India. Under the Reserve Bank of India, the Board of Financial Supervision was created. What is objective? Primary objective of Board of Financial Supervision is to consolidate supervision of financial sector comprising commercial scheduled commercial banks and cooperative bank, all India financial institutions, local area banks, small banks, payment banks, credit information companies, means the entire financial intermediaries. When I told you about the financial system, I told you financial system is having three parts. One part of financial system is what? One part of the financial system is regulators, financial intermediaries, and third is what? Third is financial market. So financial market. So all these three are the important part of financial system, and all these financial intermediaries comes under the purview of Board of Financial Supervision. So all these comes under the purview of Board of Financial Supervision. And see, the board is constituted by the co-opting four directors of the central bank and is chaired by the governor. Right? Deputy governor is the ex officio chairman. One deputy governor is traditionally deputy governor in charge of the supervision, is nominated as a vice chairman of the board. So it is about the constitution of this board of financial supervision. They discuss the things once in every month. So once in a month there will be a meeting of this BFS. There will be one meeting in a month, right? BFS oversee the functioning of Department of Banking Supervision, Department of Non-Banking Supervision, Department of Cooperative Banks, and give direction on the regulatory and supervisory issue. So their focus is what? Their focus is on supervisions. Those who are supervising, they supervise them. They supervise those people who are supervising other, right? So it's a very powerful organization because they are supervising to those who are supervising the banking entities, right? Now let's discuss what actually they do as a function: fine tuning the supervisory process and opt the banks for the regulated entities. You just read those things, right? That's nothing very important. All of you basically know that. One which I have highlighted here is prompt corrective action framework. All other things you just go through that. It's not very important, though the board itself is a very important organization and they go for the supervisory work. But the main objective to tell you about the functioning of Board of Financial Supervision is this: prompt corrective action. So introduce scheme for the prompt corrective action. So prompt corrective actions. So what is prompt corrective actions? You have seen that in last 6 month, first for banks, now for NBFCs. RBI came with the new guidelines and the prompt corrective action. Correct anything before it is going to be too late to correct. The basic meaning of prompt corrective action is to make things correct before it is going to be too late, right? So this is the main objective. So this is one of the most powerful power this Board of Financial Supervision have. So Board of Financial Supervision collect the data and they take the data from all supervisory sub subsystem of the Reserve Bank of India, and from their data, if it is required, then Board of Financial Supervision is going to push the prompt corrective action. So if the question they are going to ask in the exam, who is responsible, right? Who is responsible? Bank of Financial Supervision, Board of Financial Supervision is responsible, or they are going to mention any other name. So where you have to tick on Bank of Financial Supervision. RBI, of course, RBI, but under the RBI, who do these things? Prompt corrective action framework. Who provide the prompt corrective framework? It is not Monetary Policy Committee, right? No other body. It is Board of Financial Supervision, which provides the power to have a framework as a prompt corrective action. Weak banks means what? Their financial health is not correct and they may are going to have some big trouble. So before they are going to have a big trouble, we have to initiate the prompt corrective action for them, right? So it is all about Board of Financial Supervision. So now let's discuss other functions of Reserve Bank of India, right? So functions and Board of Financial Supervision's function. Basically, this function come through central board, whereas rest of the functions central board of RBI. Whereas the rest of the function is directly RBI, and RBI means governor, deputy governor, deputy governor. Whereas central bank, I told you one governor, four deputy governor, four local directors plus 10 plus 2. So these nominee of by the government of India and two government of India official, they play an important role when this board of financial supervision works, right? So RBI do not have a kind of monopoly in the functioning when board of financial supervision works, whereas other functions of RBI, then these people from RBI have more control. So basically, we can divide the function of RBI into category where RBI functions along with the board, and board have other people apart from RBI which can play the decisive role. Right? You can see that only 9 people from RBI, whereas 12 people are outsiders. So there is a function of RBI where other people can play an influential and important role, whereas there is a set of function which is under complete control of RBI. Though yes, when we talk about the monetary policy function, it is not right now. RBI do not have complete monopoly as it have before 2016, but still RBI have upper hand while deciding the monetary policy, right? So that is why I just want to let you know the functions of RBI in two categories, where RBI have more kind of monopoly, where RBI do not have monopoly but act according to the advice tendered by the board. Right. So I have already discussed this board of financial supervision. Now we are moving towards the RBI's function where RBI have complete control. And first and most important function is monetary authority. Formulates, implement, monitor monetary policy. Objective is maintaining the price stability while keeping in mind the objective of growth. Right. If you'll see the detailed lecture plan, I have mentioned this part separately because it should be discussed in detail. It should be discussed in the detail. It is kind of heart of Indian entire financial system. The monetary policy is a heart of entire financial system, and it must be discussed in the detail, right? So here I'm just going to let you know that this is the function, but I am going to discuss in detail, right? And if you want, I can discuss, means I will discuss it first, then I'll go to other function, or I'll discuss other functions, other related functions which are not very important as vis-a-vis monetary policy. So two options are there, but I think it's better to first discuss all these other functions, then focus on monetary policy function, right? So again, acha, one more thing I just want to ask you. Are you comfortable if I'll increase the duration of the lecture from 1 hour to 1.5 hours? If you are comfortable, please revert me, right? Please revert me. Are you comfortable or not? If I'll go from 1 hour to 1.5 hours, if you guys are comfortable, I'll increase the time. But I also understand in the online learning platform, it is quite difficult to focus for longer duration, right? But I understand this thing, so that's why I just want get some opinion from you. What do you think? Whether we can increase from 1 hour to 1.5 hours, or we should stick around 1 hour only. Generally, I go for more than 1 hour, 1 hour and 15 minutes, sometimes 1 hour 10 minutes. So if you are comfortable, I have no issue. I will increase it from 1 hour to 1.5 hours. But if you feel difficult, because I understand focusing for more than 1 hour on the screen, it's little bit difficult, right? So please send your comments, so accordingly if required, I'll try to increase the duration of the class. But before winding up, I just want to let you know, we are now towards the functions of monetary functions of RBI. And in RBI's function, one is monetary policy function, which I will discuss in detail. Rest of the functions I'll explain you, but not in that length in the monetary policy, right? Not as much this discussion is going to be happen. Fine. So today I'm winding up this session right now, and we will start tomorrow with the functions of RBI. Okay. Thank you.